Welcome to Wealth Builders discussion on real properties and real income. We're going to discuss for a few moments some actual properties that have been analyzed by KeyLadder. Some properties have been purchased by KeyLadder clients, others were not because someone purchased the property before our KeyLadder real estate agents could make an offer. Nevertheless, the math is valid, and we'd like to go through this with you. All properties listed on these slides have exceeded our clients' goals by closing. What this means is that they at least met the goals. They all varied. Most were 8% cash on cash return or above, just as one example. By the time of closing, some things occurred that improved the return on investment and the cash on cash, such as the final offering price, some of the terms, for example. Most of the properties have an additional upside for rent. We find typically that landlords are not pushing their rents up as high as they could, and in part because they want to have people in there often when they're ready to sell the properties. It does help. Creative financing has helped some of our clients. We've worked with VA buyers, with FHA buyers who are allowed to purchase a property as long as they live in it, and that works with duplexes and fourplexes, for example. And these are all examples where the return on investment exceeded typical stock market returns. We'll start with this 4-unit multifamily building. It's a single-story building. This is one of the units. It's on the end. You notice it has a yard. The purchase price was $260,000, the initial investment, which included closing costs and down payment, came to $74,000. The cash-on-cash return was impressive at 9.1%. The return on investment was close to 100%, as you can see. The monthly net income was very nice at $564.75 per month, and the net taxable income less depreciation showed a negative $85, which was a good investment. Now, this particular property had a lot of upside. The market was about $925, and as you can see, the units were renting in the $800 range. Our second analysis was a multifamily 4-unit building, very similar to the first one. This happened to be a brick building. The purchase price was $177,000 with a $56,000 investment. The cash on cash was a little bit better on this one. All the other one was very good at 11.1%. The return on investment at 120% was very nice. The total monthly net income, about $519. Of course, that is income after all expenses. And the net income after depreciation that is taxable is about $99. Now, everyone's tax rate is different, so see your CPA to determine how this would have worked for you. This is a 2-bedroom, 1-bath units, and the purchase analysis used existing rents were 25% below the market. Now, just to explain how this works, the KeyLadder program takes existing renters and uses those existing rents to run all of the numbers. We do not speculate on what the rents can be when we do the initial analysis. Now, we can cover this in a narrative form, but we don't like to push the analysis to the top. If our client said to us, how much could I get and what is the market? Of course, we give them the market rate in our analysis, and they can see that on their own. But if they ask, for example, how practical is that to push those rates, we'll have a discussion with them and we'll get the property manager involved at that point. But in this particular case, at 11.1% cash on cash return, there was a lot more that could be obtained as these leases expire. This is an example of a single house, a single family home. This was essentially a flip because it had been completely remodeled. The purchase price was $65,000 and the investment was $19,184. The cash-on-cash return was impressive at 10.9%, and as you can see, the 5-year ROI was above 150%. The net taxable income is $26.75, and we wanted to explain to you that this was based on a 5.69% interest rate. This was purchased specifically as a commercial rental using, for example, insurance for rental purposes. Here's an example of a multifamily 2-unit or a duplex. Now this one is a bit unusual because this is a 4-bedroom, 2-bath. Most of the duplexes that we come across are 2-bedroom, 2-bath, 2-bedroom, 1-bath, 3-bedroom, 1-bath, 3-bedroom, 2-bath, and a 4-bedroom unit is very difficult to find. Now the market rents here are about equal to the rents that are being charged, so not much work has to be done. A few dollars can be obtained in January, for example, of every year when the rents go up. But this one is already generating a 13.1% cash-on-cash return with a purchase price of $136,000 and essentially a $40,000 total investment. The monthly income of $436 is nice, and so is the low taxable income of $106. This building, by the way, was completely remodeled, and you can see most of these properties were in very good condition when they were purchased, so that not much had to be done afterwards, or in this particular case with this property, nothing had to be done. Now this is a townhome. It's 1 unit of 4 units in a single building all by itself, very close to the beach, within about 2-minute walking distance to the beach. So this one was set up as a vacation rental, an Airbnb rental, a short-term rental. STR is what we have on here. So the purchase price was $231,000. Now that typically would be a little bit higher than you would see if you were just purchasing a home in this particular area, but this also has value because it's near the beach. It also has a significant opportunity for appreciation as properties all along the beach are going up at a much faster rate than in other areas. So the total investment here was $30,000. The cash on cash is set at about 13.2%. Now, I want to explain here that that's based on about 70% occupancy. They have been traditionally at about 80% over the last 3 or 4 years. We don't do our analysis on the maximum. We need to leave some room for improvement because we had already met the owner's goals at 70%. And just in case something occurred where it could not be rented at 80%, we wanted to make sure that this property would still be profitable. And you can see at a 70% occupancy, it is very profitable at 13.2%. If it goes to 80%, great. If it went to 100%, it would be outstanding. The 5-year return on investment already is very good because, as I said, it has a higher appreciation rate than some other properties in the same area. The monthly net income is $292. Now, there are a lot of expenses that are incurred in here that are rolled in, which include the maid service to clean it, the electricity, the water, cable as well. Everything is all included, and that's absolute net after paying property taxes, mortgage, etc. So this was a good investment, and this one has high depreciation, so there's another $257 that will help out the owners with other expenses that they have. Now here's another example of a duplex, multifamily 2-unit. This building was built in 1880, and you could not tell by looking at it in the inside or the outside. It has had several complete remodels over its history. The last one was just a few years ago, so it is now a brick building. I suspect that it was a wooden building probably in the 1880s, and you can walk to the beach in about 3-4 minute walk, so it's very close to the beach. This price was $112,500. It was purchased for below the asking price. The investment was $35,634. The cash-on-cash return is about 13.5%, and the ROI is 180%. Now, that ROI does not reflect some of the significant increase in value of property along the beach. It has a little in there, but the ROI will probably go much higher than that over the next couple, 2 or 3 years. The monthly net income of $402 and depreciation of $330. The rents were increased by 30%. As it worked out, by the time the property was purchased, both units were vacant and they were rented for, as I said, 30% higher. So between the property values going up in the area and the higher rents, the cash-on-cash return is more than adequate and expected to go up even higher. This is my last example. These are not picked because they exceeded. So far, all of KeyLadder's programs have exceeded our clients' expectations, in large part because we do not use forecasted rents above what we can get the day that the property is analyzed. So please contact us if you're interested in having us talk to you about working with the KeyLadder program or take one of our courses on investing in residential rental real estate.